Good morning. My name is Frank Grinnell. I've been advising professional money managers and investing in the stock market for over 20 years. It serves as my day job, but most importantly, it is my absolute passion. On Street Views, I offer my daily viewpoint on the stock market in under 7 minutes. I will cover things like the global macroeconomic picture, the mood of the market, company-specific news, secular trends with some actionable sector and stock calls. I hope my insights are useful to you, whether you are a professional money manager or a passionate investor. At Grinnell Capital, we actively manage dynamic stock and ETF models for financial professionals and their clients, as well as individual investors. If you want to learn more about what we do, send me a note, frank@grinnellcapital.com. You can also find more of my insights on Twitter @GrinnellFrank. And now, today's Street Views. Hey, good morning. Thursday, August 18th, 2022. First and foremost, a very happy birthday to my wife, who's probably not going to listen to this, but happy birthday to you, my dear. And so starting off today, equity futures a bit green, less than 20 bips last I checked. Commodities, metals, and energy, both green. WTI the most, 1.8% to the upside. One thing I wanted to talk about, we've seen some short covering, but JP Morgan put a graph out that put a little more granularity to the trend that we all know has been occurring. They put a piece out that said the short covering in the last 15 days, in the prior 3 weeks, just ended 2 days ago. The short covering degrossing event was akin to that seen near the lows of COVID in 2020, just in terms of hedge funds decreasing exposure left and right, what have you. So now it's feels like a little bit of a vacuum has been left. The S&P 500 got right up to its 200-day moving average, bumped its head, and has stumbled back a bit. We'll see what happens today. It feels like there should be a bit of a pullback. The reason why we may not get one would just simply be because of the FOMO aspect. You've got so many folks that are underinvested and what have you. This thing, if it does keep on running, it does get up through that 200-day with conviction. I mean, they're going to be forced to pile in. Buyers live higher. That's just the way to think about it. So we'll see what happens. We're trimming and eliminating stocks that are not our highest conviction calls, stocks that we might have shown some weakness recently. That tends to forecast a stock that's going to underperform in the near term. So getting rid of those. We do see the environment as more risky than it was even like 3 weeks ago. The rise in the market has loosened financial conditions, really providing the Fed with more runway to tighten Fed fund rate. It feels like there's a real disconnect between where the Fed needs to take interest rates and where the market is trying to read a pivot into Fed policy. It feels like the Fed's really got to make some measured incremental hikes to get a hold of this inflation. And it seems like the market is just thinking pivot is coming imminently. I don't know. We'll see. Jackson Hole, I think, will be a big test. That's an opportunity for Chairman Powell to come out incrementally hawkish, if you will. And just as he said prior, we're not even thinking about raising rates. Maybe this is a time where we're not even thinking about cutting rates. Who knows? That being said, we are also adding to high conviction names because I don't think it's going to be like a one correlation event like it was on the way down, where just literally everything except for energy and pharmaceuticals just got blown up. I don't think it's going to be like that. I think it is going to be more of a stock breakers market. Obviously, the economically sensitive things will likely suffer the most. So we are not doing a ton in the cyclical realm right now. Keep your eye on the dollar. By rallying recently, it did not give the all clear on interest rates, in my opinion. A firm break in the dollar uptrend may signal the pivot or close to the pivot. Not seeing it yet. You look at high yield. High yield looks like it wants to roll over a little bit. HYG. So I would say, keep it tight. Again, if one were to add short exposure on an index basis or what have you as a hedge, this probably isn't the worst time to do so. And that's all I got. Good luck out there. Have a great day. Don't lose money. And we'll talk to you tomorrow.
And now for some important disclosures. Grinnell Capital is a state-registered investment advisor. Services offered by Grinnell Capital can only be offered in certain states where Grinnell Capital is registered or meets required exemptions. Registration does not imply a certain level of skill or training. For additional information about Grinnell Capital, including its services and fees, please review the firm's disclosure statement as set forth on Form ADV and available at no charge at advisorinfo.sec.gov. This podcast is provided for informational purposes only. The information contained herein should not be construed at the provision of personalized advice and is subject to change without notice. This material should not be considered as a solicitation to buy or sell any asset or engage in a particular investment strategy. Investing in securities involves the risk of loss, including loss of principal invested, and may not be suitable for all investors. Past performance is no guarantee of future results. This podcast contains certain forward-looking statements which indicate future possibilities. Actual results may differ materially from the expectations portrayed in such forward-looking statements. As such, there is no guarantee that any views and opinions expressed will come to pass. All expressions of opinion reflect the judgment of Grinnell Capital as of the date of publication and are subject to change without prior notice. This podcast contains information derived from third-party sources. Although we believe these sources to be reliable, we make no representations as to the accuracy of any information prepared by any unaffiliated third party incorporated herein and take no responsibility therefore. This podcast is provided with the understanding that Grinnell Capital is not engaging in rendering legal, accounting, or tax services, and we recommend that you seek out the services of professionals in these aforementioned areas. The principal investment focus of the accelerator model, the strategy, is to achieve strong relative and risk-adjusted returns, primarily by investing and trading in securities issued by companies that focus on the global information, technology, consumer, healthcare, industrial, and infrastructure sectors. These sectors are characterized by robust secular growth, an abundance of both new and maturing product cycles, a high degree of competition that creates the potential for relative winners and losers within a subsector or theme, a high degree of revenues and earnings volatility, rapidly changing sentiment and public perception, significant yet unrealized potential for globalization, and superior relative liquidity. Investment in the strategy is speculative and involves a high degree of risk. The second investment model is called the ignition model. The ignition model is an all-exchange-traded fund, ETF, strategy with investment objectives similar to the accelerator model. This model seeks to capitalize on long-term growth trends experienced by the market leaders in various areas and sectors. The ignition model will also seek ETF investments based on cyclical forces experienced in the U.S. and the global economy. This model is also designed to have the ability to offer some downside protection in the event of significant market stress through investments in ETFs designed to take advantage of market volatility. The strategy's performance can be volatile. Grinnell Capital has total trading authority over the strategy. The use of a single manager applying similar trading programs could mean a lack of diversification and consequently higher risk. For more important disclaimers, please visit our website, grinnellcapital.com.